All right. Well, good afternoon, everyone. This is Scott Thompson, and we are here for another episode of Stock Investing for Beginners. Give a shout out to Rojo and Gary Taylor and Sharon and JV Texan and Scott Luck and Robert. Appreciate you guys taking some time out of your afternoon to be here with me today. The bell has just sounded, and want to give a shout out to Barb last week for covering for me. It sounded like it was a great webcast, and Barb and I talked afterward, and she used a little bit different, moving average than we've been using in our class. And she was just so impressed with everybody that, you kind of started to dial in a little bit on a particular plan, which is one of the things I want to talk about today is oftentimes in, the surveys that we do, and just I remember feeling this way many times myself is like, if I had to start today, what would I do? And so I want to cover some of those things today. We're not going to change really anything up, but just going to reinforce what we've been doing over the last several months. But I want to just show a few slides, go through a little bit of the reminder process of what we're trying to do. If you're brand new today, you'll see some ideas that may help you develop a plan for yourself. As always, we want you to share this information with your children or grandchildren if they're trying to get started in their investing world. And I just wish somebody would have shared with me what I know now when I was in my 20s. Would have been a very, very different scenario for me and my family. So hopefully that's useful for you. But before we get started, let me go ahead and remind everybody that the presentation today is for educational purposes only, not a recommendation or endorsement of any particular investment, any stock, any strategy, which we're going to be talking about today. Also remember that Schwab does not recommend using technical analysis as the sole means of investment research. We are using the paper money software for Thinkorswim. I'll be using most of the time on the paper money version, but we're going to be sharing a scan today that uses studies, and so we'll be using the live version of the demo account. So there are some significant differences between your live trading and your paper money trading. We'll be talking about stop orders as always. There's no guarantee that an execution of a stop order will be at or near the stop price. And then also realize that all investing involves risk, including the loss of principal, and past performance is no guarantee of future results. So if you are brand new to our class today, we do have 8 lessons that we've gone over. These lessons are available on our YouTube homepage. If you go down just right after you put Trader Talks webcast is the name of the YouTube channel. If you put that in search, and just on the homepage, if you scroll down a little bit, you'll see Stock Investing Basics. And we've gone through all 8 of these lessons. Over the last several weeks, we've been focusing on different components of these lesson series. And today, we're basically, if I had to start over today, the very first thing that I would want to develop is a plan. And so we're going to go through kind of that process today. We're going to look at hopefully several different buying signals and go through the process of how to find those manually, and also look at those from a perspective of letting the technology do some fast work for us. So let me do first here, one of the things is why we invest. And I just flat out didn't even think about this when I was in my, early 20s or just after high school. Had no idea really about investing. I had a friend that bought some stock in his father's company, and he would show me, once a quarter, every so often. He's like, I got 11.37 shares of XYZ company, which wasn't XYZ back then, but we'll call it YZY or something. But the reason that we invest is to hopefully grow our portfolio. I have 2 examples here. One is Maria. They each invest $30,000 or $3,000 every single year for 10 years. And that's one of the very first principles that you want to take away from our webcast today is it probably never feels like the right time to get started. Does that make sense? Obviously about 2-3 weeks ago when the market was at the lows, I mean, we've had a rocket ship take off over the last couple of weeks. And so, probably feels worse now to start than any other time because the market was down and now it's up and we're at all-time highs. And it's just really hard to get started. But, one of the takeaways definitely would be is just get started. And take a look at your situation. I'm not making a recommendation for you specifically, but it'll always feel like it's not the right time. So in this example here, we have Maria investing 20 years ago, and she started and put $3,000 a year in, and Anna started 10 years ago, $3,000 a year on January 1st. Now, again, this is just an example here. Um, Past performance is no guarantee of future success. This is a hypothetical portfolio that tracks the S&P 500. But the point is, time is one of your greatest assets. So, when you get started, I think being consistent in how you do that. And one of the trading plans we talked about many, many weeks ago was we were investing, money every single day in an ETF that tracks the S&P 500 and the NASDAQ. Another plan that we're implementing is we're investing every week in, some high value stocks, some really, really big, large mega cap companies every single week. We do a little bit of fractional shares, and there's some specific risk associated with those as well. But the point is we're doing something very consistently, and that's what these two women did in this example. One of them started 20 years ago, and the other one started 10 years ago, and you can see the big difference in the returns just because of that time and accumulation. So hopefully you'll take that away for today is, look at your situation, see if today is the day you want to get started, or your grandchildren or whoever, and then, call someone to help you out there. All right. Now, when you do this, or when you decide to, yeah, I'm going to do something, today I wanted to look at the investing plan components. And an investing plan, and Barb has some great webcasts. If you want to go search her page, she has a page or a playlist called Trade Management Mini Series. A lot of great little short videos on candlestick patterns and trading plans, and lots of great things in there. So if you want to go look at that out, you can check that out. But trading with a plan is like a recipe of what we do. And this is what Barb was so impressed with last week with our class, is like, hey, you're doing something a little differently than Scott was doing, which is fine. Her recipe was a little bit different, nothing wrong with that. And so, when you have your plan, and the guideline I'm going to give to you today is called the 2 Green Arrow Plan. Again, not a recommendation that you should or have to use this plan, but what I found that most people need someplace to start. And so that plan should have a plan objective. You want to identify what you're going to buy. You want to identify when you're going to buy that. You want to identify how much you're going to buy when you buy. You want to identify when you're going to sell. And then, most recipes or plans, investing plans, will have somewhat of a daily routine where it'll help us, what do I need to do today? What do I need to do this week? And so, and in that plan, our last little bullet there is to help minimize, I don't think we can eliminate, but help minimize those emotions. So let me do this. Let me go over to my Thinkorswim platform and pull up our paper money platform where we've used this 2 Green Arrow plan. And, there's links in the description already in this webcast that have a link to the chart that I'll show you here in a minute. It has the indicators that we use. It has these column headers that make it very quick to see kind of where our stock is in relationship to the 50-period moving average, and what our MACD histogram oscillating indicator is doing. So what I want to do first is to show you the process of trying to find something to buy. Because, when you start, you have money and no stocks, right? And just kind of as an aside, if you open up like an investment account or a retirement account, if you put money in there, it doesn't automatically go to a stock. You have to tell either the broker or choose yourself to put it somewhere. I've heard stories, and sad stories, about people putting cash in their brokerage account, but they didn't invest it in anything. And so it just sat in cash. And really, that's not going to be any different than setting it in the bank, and maybe even worse, where it doesn't enjoy any interest depending on the account you have. So, as you're trying to decide what to invest in, hopefully I'll show you some ideas here. So, kind of happy coincidence today. Because I was gone last week, I actually went through and looked at every single stock in the S&P 100. And so let me show you first a couple of ways. If you're brand new, this will be new for you. If you've been here, just bear with me a second. So on the left side of our paper money and our live money in Thinkorswim, there's these gadgets over here. I have the watch list gadgets selected. And if I click on the name drop-down menu, there's some public watch lists that are available for everybody. Right here on the R through W, you can see the S&P 100. And we won't take time to go through all the little details of the investing plan. You can go back and check out lesson 4 on our homepage of our Trader Talks, and it'll have a detailed review of the rules. So I'm just going to talk through them here. But our objective is to buy stocks in the S&P 100 that are uptrending and hold them until the trend changes. That's the objective. Hopefully, that trade lasts for months. In fact, some of these positions that we've had over here, we've had open for months. Okay, some of them recently have been stopped out, but some of these we've had for several months. Some of them are brand new. All right. So here's the process, and I went through this, and then I'm going to show you the scan that I used that just happy coincidence worked out really well today. That doesn't always happen. But this is the process. Once you decide, okay, I'm going to buy a stock when it has my buy signal, and we'll talk through that as we go through this. But on the Thinkorswim Charts tab, if you click this little drop down menu, there's, your default setting is going to be unlinked. But if I click that and link it up red with whatever watch list I have on the left side here, red, then when I click on the stock, it'll show on the chart. So let me just change it so you can see that. So once you click on that chart, it'll just change for you. Okay. So right now we're looking at Apple. And one of the things that I want to do before I shrink this down is just review what it is we're looking at. So we have a candle chart. We're on a 6-month, 1 day. So every candle represents 1 day. We're on a 6-month chart. The green line here, let me get rid of my cursor crossbars, and let's change my drawing tool to just the cursor so it's a little bit bigger. But that green line right there is a 50-period moving average. So we're on a daily chart, so that's a 50-day moving average. This purple dashed line is a moving average envelope that is 1% below the 50-period moving average, which is just a quick visual of where we're going to set that initial stop order. And then we have a MACD histogram down here that basically kind of shows up that shorter term momentum. Obviously a red arrow would mean the stock's probably going down or come down a little bit off the highs recently. When it goes up, that's generally coinciding with price moving up. All right. So that's our chart, fairly simple chart. And our plan, again, just for review, is to buy stocks that are above a rising moving average. So we just want to make sure the green line's rising. Okay. And how do we tell it's rising? We look at it and say, does that look like it's rising, or does it look like it's falling? Okay. If we really want to get technical, we can put our cursor on a day like today and just look right up here at the top. The cursor today, or the moving average, that green number right below study says 260.69. The day before, a couple days before, said 260.26. You guys see that right below studies? So if you're not sure if it's rising or not, you can go in and get those values on there. But what we're looking for is right here. Do you guys see that little green arrow? Let me zoom in maybe a little bit. But there's a green arrow right there this is on the 14th or 15th of April. And the reason that's a green arrow is because the stock went above the moving average that day. And then it stays green until the moving average is crossed again. For example, over here we had a green arrow on the 23rd. It was green until it turned red on the 27th when it closed below the green line. All right. Now the MACD basically is pretty easy. There's a green arrow when it crosses from red to green, or when the indicator itself goes above what's called the zero line, which is over here. Today we got a red arrow. So when we're doing our analysis and when we're getting started, one of the things that drove me crazy was I would look at a chart for literally 10, 15, 20, 30 minutes per chart, trying to decide what to do with this. Should I buy it? Should I not buy it? I had an idea of what my buy signal should be, but it was just so hard for me to take action. So the faster that you can accept a particular buy signal, and here's a little secret, there's lots of good ones. There's no perfect entry signal. But once you accept that entry signal, it's like, okay, great, I'm going to act on this entry signal. Then the next thing that really makes it easier to invest is to invest in an amount that you're okay losing. And I know that sounds, well, I don't want to lose any of it. Well, the point is every stock goes up and down. And so every time you buy something, in fact, it's fairly common after you buy it. Obviously, the market knows Barb and Scott got in there, so it's going to send it down. But that's pretty common. It feels like the only person that ever happens to is us. We buy something, the next day it's down. That happens to everybody. But when we buy something, we just want to act on our rules. So let me review those rules with you just briefly. So when we have a stock with two green arrows, that means the stock's above the moving average, and the green arrow is green until it turns red, and the MACD turns green, that we consider a buy signal. Our portfolio that we're using, this mock portfolio, is the $10,000 portfolio, and we're trying to diversify our portfolio by investing about $500 per position. And so we can have up to 20 positions. If you invest 5% of your portfolio in one stock, then you can have about up to 20 stocks or so. And we have 17 right now in this portfolio. All right. Now, once we buy it, we're going to set an initial stop 1% below that 50-period moving average, which is where this purple line is. And that's all we're going to do. So here's the daily routine. Very simple. And I would recommend, please, at least once, maybe once a month or so. But what I would really like to see you do is to go through the whole watch list manually. Okay, I know none of us like to do that anymore. Well, give me a scan and I'll just run the scan and put a look at those stocks. I'm telling you, there's great value in looking at that watch list regularly, maybe once a week, maybe once a month, whatever it is for you, but to go through the whole watch list. Now, let me show you how fast this is. You're going to think, oh, I could do that. Is on Apple, all I have to do is look at the far right side. In fact, let me change the chart down to a 3-month chart. So we're just going to zoom in on the last 3 months. And I'm just looking right here on the right edge. And I'm looking for two things. Is the stock above the moving average? If it is, that's one. Is the MACD green? That's two. So what do we see on Apple here on the right side? MACD's red. I'm done with my analysis. I can click on the next stock. The stock's below the moving average. I don't even need to go any farther. ABT, below the moving average, done. ACN, done. Adobe, done. AIG, below the moving average, done. AMD. And AMD is interesting. AMD is above the moving average. We got a green arrow here back on the second. We actually tried to buy this a couple weeks ago right here. I put a limit order on this stock, back when we had a class. And the next day it gapped up and then it just kept running. I could have, and I think, in a great case scenario, I would have redid my order, but I just missed my limit order, and that'll happen. You place a limit order that says, broker, buy this for me at this price or lower. In this case, it gapped above my entry price and never looked back, and literally missed out on about almost $100 run there on AMD. So question number one, is this a valid buy signal right now? You guys tell me, is this a valid buy signal on AMD right now, right today, based on those rules we've gone over? We have Jeopardy music playing in the background. You're thinking. So technically, yes. So here's another little nuance now that you need to incorporate into your own rules. How close to a green arrow? I mean, the MACD on this one's been green since the 3rd or 4th of March. So forever this has been green. And we just recently got a green, well, not recently, we got a green arrow, a few weeks ago. Now, even right through there, that's not a valid buy signal. Why? Why is it not a valid buy signal from about, the 6th of April through, let's call it about the 16th? Why would we say that's not a valid buy signal based on our rule set that we've kind of gone over? Well, because the moving average was falling at that point. It really wasn't until about right here when we placed our order, that moving average had ticked up. Again, if you look right up here and underneath studies, when I have my cursor on that day, 210.57, 210.57, 209.61. Do you see those numbers changing? The moving average didn't start rising until right about there where we placed our order. And just unfortunately for us in our paper money account, we missed that entry. And so, but this is still a valid buy signal. I see many of you putting, you know, that it is a valid buy signal. And Jay Richardson says, yes, it's late. Absolutely. Based on the rule set we had, it's late. Okay, so you'll have to decide, whether or not you want to buy that stock. If we bought it up here, and this is another thing that's going to drive you nuts, but that's the rule for our plan at least, is if we even bought it today, 337.11, let's say, our stop order based on our rules would be down there at about 226.85. That's $100 of risk per share. Nobody wants that. But again, that's kind of how the rules work. Probably what will happen is, AMD at some point will probably consolidate, go a little bit sideways. The moving average catches up to it. And then when it closes below the moving average, that's when we adjust our stop to, 3% below the low price of that day. All right. So anyway, I just barely showed you, we went through what, about 7 or 8 stocks. I would recommend that you do that once a week, once a month, just manually going through very quickly and just determining, do I have 2 green arrows and is it a valid buy signal? All right. And I did that with all of the stocks in the S&P 100 getting ready for our class today. Now, here's the fun point. What if there was a way that we could use technology to help us do that? Everybody's busy. Most of us don't even have that 5 or 10 minutes it feels like to go through the watch list. Is what if we could build a scan that helped us find recent activity on the MACD and the moving average that said, hey, this one has a valid buy signal on it right now. Okay, so I did this. I upped or changed or modified. We had a 2 green arrow scan. That one's in the description. And I also added this one in to the description as well. After the class, it'll be there. But here's the code. And so I'm going to chat this in here in our class so you have it. And what you do is you would go up here to the right, click Setup, click Open Shared Items, and then just copy and paste that code in here. And if you click Preview, it'll tell you, the name of that scan or study or whatever it is. Okay. So now the problem with this one is this one uses studies. So we have to go into the non-paper money version of Thinkorswim, which I have open over here. So let me show you. This is a dark background. So if you don't like the dark background, just bear with me for a second. But the only place that this scan works, because it has 2 studies. It has a MACD histogram study and it has a moving average study. And so I shared the scan, and that's what we're looking at. That code I just put in the chat is the one that's there. And so you load that in, and you'll notice this is the change right here. Scan in the S&P 100, where before it said scan in energy or scan in like consumer discretionary, but this one's scanning the whole S&P 100. And when I ran that, I got these 6 or 7 stocks over here. All right. Now, coincidentally, these are some of the stocks are the same ones that came up in my manual search or review of every stock that was in the S&P 500. Now, again, the scripts aren't guaranteed for accuracy, and sometimes because of changes, like even from hour to hour, some stocks may or may not show up. But what I wanted to do is just take a look at these stocks, and then we can kind of do that same analysis. We'll place an order on a few of these, and then we'll be done for today. I just want to go through these and, talk about if I started today and I need a plan. We've gone over the plan. We have a scan that we could run very simply. And then my job at this point is just to check to see if these have a valid buy signal. Now, I have these 2 columns. These column headers are already in the description of this webcast, so you can put those in there. But this makes it visual. You can see we have within 1 to 5 days, the MACD's gone green and the stock is above the moving average. Some recently, some that have been up there for a little bit longer. So let's just go through these today together. And I'm going to just quickly grab those symbols so we have them. But the very first one I want to look at is COP. Let's go back into our paper money. So I'm just going to type in COP, hit enter. Oops. And the question again is this a valid buy signal? All right. Now they have earnings. So here, let me share you some of the things that have come up as we go through this today. You will want to decide whether you want to buy the day before earnings or not. Okay, these guys are announcing earnings before the market opens tomorrow morning. What's the disadvantage of buying or placing an order right now? Well, the market's closed right now. There is some extended hours trading sometimes that you might be able to buy something after hours, but we're going to pretend we can only buy during market hours. So I could place a limit order here at 128.25. I could set my stop 1% below the moving average. And if I put my cursor on there, you can see 120.27 comes up for our stop order. But what's the problem? What's the challenge? Well, if we do a limit order and it gaps up tomorrow because of good earnings or good news, then we might miss the order like we did on AMD. And then you have to decide, after the open, if you get a chance to break from work or whatever, go check to see if that's a valid entry point still for you at 129 or 130 or 135, wherever that opens. If we place a limit order at 128.25 and they have bad news or bad earnings, what's going to happen? Well, if, let's say, it gapped down to 115 on the open, guess what would happen? It would fire off that limit order and we'd buy the stock at about 115. And if we set up the order the way I'm going to show you today and we had a stop at 120, what would happen immediately after that? Well, we get filled at 115 and then get stopped out probably a little bit below that. So, you have to decide whether you want to trade something over earnings or place your orders the day before or a couple days before earnings. Now, on COP, we already own this one in our portfolio, so we're not going to trade this one today. But I wanted to show you because it came up on the scan. All right, CVS was the next one. Okay, CVS. Now, first question, is this a valid buy signal? Okay, valid buy signal? Yes or no? Well, let's kind of go through the checklist. The moving average. Now look again right below studies. Yesterday, let me go ahead and put a little line on my cursor so it's a little easier to see. But yesterday, that moving average value was 76.19, and today it's 76.30. So technically, the moving average is rising. Now, this stock you can see has been consolidating a little bit, came right up to resistance here a few days ago or yesterday, and it's breaking resistance. We would call this a breakout entry signal. And coincidentally, the MACD is green, and so is the moving average. So this is a valid buy signal based on our rule set. So what do we do here? Well, this is the way I learned how to do it. You guys can figure it out however you like to do it. But I start writing down the symbols that have a valid entry for me. Not that I'm going to buy this yet, but I want to compare this one to the other signals that I have. Does that make sense? Do I feel best about the trend on CVS, or is there another one that's maybe uptrending a little stronger, or that hasn't moved so far and I don't have to spend so much money so far away from the moving average or have so much risk per share? Those are some things that I might check, right? So I see someone, Olga, saying, better to watch it come back and retest. This is a technical principle. Old resistance sometimes will become new support. And so we might see the stock pull back and test that and look for what's called a bounce, which is another thing I wanted to cover quickly today toward the end of our session, because it's kind of an interesting thing. All right, but CVS, valid buy signal based on our rules. We don't own this stock, I don't think, right now. And so we could add our position here. Now, I didn't remember those symbols, so let's take a look. Intel, Coke, and Mondelez. Let's look at those three. So Intel, INTC. Okay, first question, valid buy signal or no? Moving average obviously rising. MACD's green, about 4 days old. Had a huge gap up on earnings. and it moved up 12% today. So valid buy signal, yes or no? Yes, valid. Do you want to act on that valid buy signal today based on your own personal rules? Well, that's up to you. Again, this one's moved off the moving average quite a bit. So let me give you a little nuance again to what you could do as an investor that maybe reduces your risk a little bit per share, but also increases your probability of getting stopped out. Technically, okay, any technical rules not 100% guaranteed, obviously, but the low of a gap up day is an area of potential support. Okay, so some traders might go and say, well, I see some support here about 79.46. I'm going to set my stop below that, which in this case would be well above the moving average. And so, but this one's another one, the valid buy signal, maybe not as comfortable for some people as others. And so we maybe write down the symbols to come back and look at again. Okay. Let's go look at, what was it? Coca-Cola, KO. That was another one that came up on our scan. Now, KO, this is interesting. The scan only looks for stocks that are above the moving average. So we have to decide, is that moving average rising or not? Well, let's put our cursor vertically here. Okay, so it's picking up this information when I do that, so it's hard to see. Let me shrink down my gadget over here. So what's the moving average value yesterday? Does everybody see that? Look under the drawings there, top right, just right up here. It's not there when I move my cursor up there, but take a look right up there. The moving average was at 77.20, and today it's at 77.18. Okay, so theoretically, not theoretically, that moving average is still falling a little bit. And technically, we're trying to buy stocks that are above a rising moving average. So this one doesn't really meet our buy criteria. However, again, and all of your rules are going to have these little nuances, is the moving average is a 50-period moving average. How long is it going to take for that thing to start rising with the price pulling it up? Well, it's probably going to be a few days or so before. So what some investors might do is they might take a look at the trend and say, well, this trend was fairly flat. Let's go ahead and put like a resistance line right there about 78.29 where that last high was. Did the stock break that resistance? Well, you could argue maybe it closed right at resistance yesterday. Today it's going to close above resist. Well, it did close above resistance. So some traders would say, oh, that's a valid breakout entry signal. Maybe not a valid 2 green arrow Scott Thompson investing plan sample buy signal, but that's a close above resistance. I'm going to take that as a buy signal. So that's another thing that you may want to look at. The support for this has been down about 74.39, and some investors would probably say, well, rather than put my stop 1% below the moving average, I'm going to go 3% below support and give this stock a chance to bounce around and trend. But again, the questions that I'm asking as we go through this little exercise is this a valid buy signal? And the answer here was no, because the moving average is falling. So you may say, well, why did it come up on that scan, Scott? Well, because all this is doing is looking for something that's above the moving average, not that the moving average is rising. Okay, so let's take a look at Mondelez and Altria. Let's shrink this down over here. So MDLZ. Okay, how about this one? Now this one, a little easier to see, but you still have to kind of maybe take a quick look at it. The moving average value yesterday was at 57.93, and today it's at 57.95. So technically that has ticked up. What else do we know? Well, we had some resistance in this neighborhood, and we've gapped above that resistance, and they had earnings, so we don't have to worry about earnings anymore. They broke resistance. The MACD's green, the stock's green, the moving average is rising. So again, as we take a look here, MDLZ, valid entry signal based on the rule set. All right. Then we had Altria, MO. How about MO? Well, MO was in a great uptrend. It's been consolidating a little bit. Here's our last kind of support resistance area, the high of which was about right there. Some horizontal support in this neighborhood, about $64. Is this a valid buy signal? Moving average and the stock or the MACD are green. If we put our cursor there, 66.61 yesterday, 66.64 today. So technically, yeah, it's rising again. But it's still going to be choppy. When it goes sideways, that moving average is going to oscillate. But again, you'll have to decide, is that a valid entry signal for you? It looks like these guys announced earnings before market tomorrow. So again, I think Jay Richardson was saying, hey, I don't ever buy the day before earnings. Some people do and want to speculate that it'll be good and gap up, but the risk is, of course, that it might gap down. So again, with Mono or Altria here, this is a breakout. It's a close above resistance. So technical traders would consider that a valid breakout entry signal. But let's put MO here. And then this is another thing that I like to do when I'm going through is I might put like a little E for earnings are coming up. And that way, if I've got some that have a valid buy signal that don't have earnings or that earnings have already passed, it might be a better, a way for me to evaluate, well, I'll buy that one over this one. All right. So there's MO. Okay. A couple more I want to look at, and then we're going to play some trades. So we had NEE and Starbucks. Okay. Last two on the scan. And then I want to give you a reason to consider at least going through the watch list. All right. NEE. Now, NEE, we actually already own this one. You can see our existing stops down here below support. But is this a valid buy signal? Well, we have some resistance up in this neighborhood. And here, I'll just draw a line at 94, but it had some old highs up there about 96. It kind of had a great breakout here on earnings. Green arrows on the MACD and the moving average, green arrows, but now we've pulled back a little bit. The candle is red, but the stock's still above the moving average, so that's a green arrow. And I think it's still rising by 3 pennies, it says. The MACD is green, although old, about 5 days old. But is this a valid buy signal? And the answer is yes. But is this one that we want to buy today? Well, we own it already, so probably not. But if we didn't, we can kind of still go through that analysis. Jay Richardson says, ugly candle today. Yeah, in fact, if you're a technical trader, you would have said, well, that broke resistance here, valid entry, but this is now maybe closed back below resistance. And you may say, well, that breakout has failed. Some have a range of failure before they'll call it a failure, but it came up there, tested. And this is kind of testing that area. Tomorrow we could get a little bump up a little bit, maybe close at 94 and change. But basically, again, you have to decide what your buy signal is. And we're saying our buy signal is pretty broad. Above a rising moving average, green arrow, MACD green, no matter how old, those are valid signals. But we may want to look a little bit closer and see if there's something better. Okay. So let's look at Starbucks, SBUX. Starbucks. Now, what do we notice here? And Jay Richardson said, is today a valued failure? Because that resistance area, Jay Richardson, is an area and not a specific support or specific price level. That one was so close to that resistance area that as a technical trader, I would not say that breakout has failed. It's just retesting pretty hard, where now it's kind of below the line that I drew. That makes sense? All right, let's take a look at Starbucks. Starbucks is interesting because why? Well, they had earnings, so we don't have to worry about that anymore. Apparently, their earnings were okay because it's up 8% today. We had some resistance at 99.50, let's call it. We had some old highs up here, 101.40. We've obviously closed above and broken resistance there. This is something that I might want to take a little bit longer view, like change my chart to a 1 year to see what's going on over the last year. And man, these guys really struggled. They were in this channel between about 100 and call it $78 for a long time, right? And they just broke out of that. Well, where could this go? Well, the top of my chart's at 115, so obviously it can't go any higher than that. Ha ha, my joke. Let's take a look at a longer term chart. Let's go out to a three-year chart. These guys looked like in the last 3 years, the highest they've ever gone is about 117. So is that on the horizon possibly? Could be. So, but again, what we're asking ourselves as we go through our daily routine is, do I have a valid buy signal today based on the rules that we have chosen to follow? And in this case, we do. Starbucks valid entry. All right. Now, there's two other stocks I wanted to look at that did not come up on the scan that I found as I was going through the watch list, and I'll tell you why it didn't come up on the scan too. Okay, UNP. Okay, UNP. So moving average 252.44, 252.40. So theoretically or technically it is still rising, although it's going to be a little choppy because it was down below there for so long. This is what's forming a short-term bull flag price pattern. And so this is one where technical traders would think, hey, that looks like it's kind of coming back and testing some old areas. The stock gapped up on earnings. The open price was right there. And so, that one kind of coincides with this, a lot of congestion. So this might be a potential support level coming in there. Obviously, the old highs were in this neighborhood between 256 and call it 250, 350. I think is a better resistance area. But this is coming down into that bull flag. It might be doing what Jay Richardson was talking about and Olga was talking about earlier, is coming down to test an old area of congestion as maybe the new support area. And the question again, is this a valid buy signal? Okay. Green arrow on the MACD, although quite old, and a green arrow within 4 days of the moving average. And the moving average technically is still up by 4 cents. So this one has a valid buy signal based again on our rule set. So UNP. And we've spent a lot of time going through these different ones. So you'll have to go back and analyze these for yourself. But what I want to do is I want to do two trades with you. I want to place an order on Starbucks. So let's go back to this one that has had a recent breakout, and we're going to follow our rule set here. And it's just very easy. So we've got a signal here. We do a right click about where the close was, buy custom with stop. And we're going to put a limit order at the close, 105.50. So that's, I dialed that right in. That was right on spot. 105.50. That's going to be our limit order. No guarantee it gets filled there. It has to open at that price or lower. How many shares can we buy? Well, if we're willing to invest up to 500, we could do 4 shares. So we can do 4 shares. Let's go ahead and link that up. So we'll buy 4 and then set a stop order on 4 shares. Now, where do we set our stop? Well, if I put my cursor back up on that purple line, look over to the far right. In fact, let me zoom in so there's not so much space over there. But if I put my cursor there, see the 95.49? That's where we're going to set our stop, 95.49. And we want that to be good till canceled. And I'm going to go ahead and put good till canceled on the buy order too. And then we hit confirm and send and just review our order. Buy 4 shares, 105.50, limit order. Stop here at 95.49. No guarantee we get filled at 95.49. That just triggers a market order, and it could be filled lower than that. Our total investment looks like it's about $422, and if we have a group set up, we could put it in our 2 green arrow group. And so I'll send that order off. Okay. So that one's on Starbucks. And basically now part of your daily routine is to look tomorrow morning or sometime during the market day to see if that order has filled. If it has gapped up a little bit, recognize it would have to come back down to 105.50 to fill the order. All right. All right. Last one. Let's take a look at this UNP. And I want to show you a technique that gets us in when and if the stock goes up instead of comes down farther. You guys remember at the very beginning of our webcast where we talked about, seems like when we buy something, it just goes down. Well, this technique minimizes those chances. This is called a buy stop order. And what technical traders will do is they say, the stock's coming down. I don't know if it's going to keep going down, but when and if it goes back up, like when it's coming down, when it starts to go back up, that's when I want to get in. And we call that a buy stop order. And we're going to put that order like right at the top of this candle, which is 267.80. Okay. So buy custom with stop. We can do the same process, but it's a little bit different. Is we're going to use, instead of a limit order, we're going to say that high is at 267.80. And some people will go like 1% above that. Some people will do like 20 or 50 cents. I'm just going to use 20 cents for our example. And that'll be 268. And it's not a limit order. It's going to be a buy stop order. And we're going to say, I don't want to pay more than, so we're going to do stop limit at 268.50. If we put our cursor up there, 249.91, that's where the moving average envelope is. And we're going to make both of those good till canceled. And so this is, we can do, let's call it, let's do 2 shares. That'll put a little over 500, but close enough. Confirm and send. Only if it goes above 268. That will catch the momentum going up, and hopefully at the end of the day it'll be higher than that. But if it's not, that order won't fill, and then we can check it again tomorrow and the next day and the next day. And if and when it bounces off that support, it'll get us into that trade. All right. Well, hopefully that was helpful for you today, going through that routine, going through those rule sets. You know, find something that works for you and get the ball rolling in whatever best suits your needs for your investing. If you have some questions, you know, Barb's done a great job of answering those questions along the way. Uh, After this is posted in the recording, you can put some questions in there, and I look at those every single day. If there's questions there, I will answer them. And so if you have some questions from our presentation today, if you're watching the archive and have some questions, feel free to put those questions in the YouTube comments, and I'll address them. Thanks, everybody. Have a great day.